Perfect. Let's get on this. Welcome to the second lesson in the bootcamp. So in this, we're going to be going over, obviously, each lesson of the bootcamp from start to finish. So let's just have a look. Obviously, each lesson of the bootcamp, yeah, that's fine. We want to make sure the live's set up all good. Then I'm going to put the link in the chat. Copy link. Bootcamp day 2. Let me just get this going here. There we go, perfect. So we're just going to wait for everyone to join, make sure everything's all good. Then from there, we'll get into day 2 of sort of everything. So let me know if you can hear, see me. Everything looks all good. And then we'll get into this second day of the bootcamp. To those who are just joining us tonight, basically what we're doing is every single day throughout December, we're going through a new lesson of the bootcamp. So yesterday we covered basically what is trading. And now today we're going to be covering lesson 2, understanding the markets. Basically, we're going to go through an introduction to understanding the markets. Then from there, we're going to go over in a bit more detail, and then from there we're going to answer a quiz. So this is going to be, hello DB, hello Tom. This is going to be more of a lecture style live. The normal lives that we do will come, but they'll be later on around market open, market like reopen. And so those will be the more chill back lives where, we just sort of have a catch up and go with the flow. This is going to be more of a lecture style where I'm basically explaining everything here. Then we'll open the floor to everyone and go into a normal quiz. So for this, we're going to start off with the introduction. Then we're going to go over the resource material and the summary. Then from there, we're going to go into the quiz, do the quiz, and then finish it up. So let me know if that sounds all good, and we'll get straight into it. Hello, Nisi. Hello, Johnny. Hello, Simon. Hello. Again, this is going to be more of a lecture style live, so less like answering questions and this, that, and the other, and more just getting into the nitty gritty, getting into the details. And then when we get to the quiz part, I'll open up the floor for you guys. And I do recommend getting like a pen, paper, or just having somewhere where you can jot down your answers, because for the quiz it's like A, B, C, D quiz. It's good to keep track of your answers, write them down, and then when we come to go over the answers, then you'll be able to see, okay, I got this right, I got this right, I got this wrong, I got this wrong, I got this right, etc., etc. So for the quiz part, I definitely recommend having somewhere you can write down your answers. Hello, Chris. Hello, Ian. So let's get straight into it. So we're going to go over the introduction, start first. I'm basically going to walk over this. I'll highlight parts which I think are particularly important, and basically go into a bit more detail on them. And then once we've done that, we'll go through the educational resources section. Then we'll get into the quiz where you guys can see if you've picked up the knowledge. So let's get straight into it. So now you've grasped what trading is during that first bootcamp lesson. Brilliant. Now comes the practical questions. Where exactly are you going to trade? This isn't a trivial decision. The market you choose will shape everything about your trading experience, from the hours you keep to the strategies you use, and even how much capital you'll need to get started. So this is referencing basically different markets. So that's Forex, crypto, commodities, etc. Indices, things like this. Here's what most beginners get wrong. They pick a market because someone on YouTube made it look easy, or because their mate trades it, or simply because it sounds exciting. Crypto, Forex, day trading, stocks. But here's the reality. Each market has its own personality. Crypto is definitely the naughty one in the corner. Its own quirks, its own requirements. What works brilliantly for someone with a full-time job might be completely impractical for someone who needs a more flexible schedule. What suits a person, analytical person, might be more driven, action-oriented trader, absolutely mad. In this lesson, we're going to go over and explore the 4 major markets that serious retail traders actually use: Forex, stocks, futures, cryptocurrency. We'll cut through the marketing nonsense and look at each market, what each market genuinely offers. You'll learn about trading hours, because if you work 9 to 5, you can't exactly day trade the New York stock market, can you? We'll examine transaction costs because those seemingly tiny spreads and commissions add up quickly and can completely erode profitable strategies. We'll also disclose capital requirements because starting with £500 versus £25,000 opens basically different doors. But beyond the mechanics, we're going to help you match markets to your actual life, okay? Not the life you wish you had, but the one you're living right now. Do you have a day job? Do you trade during peak liquidity hours? Are you patient enough for swing trading, or do you crave more action and intraday trading? Okay. Do you get stressed holding positions overnight? These are all trivial questions. They are the difference between choosing a market you'll stick with versus one you'll slowly grind away at you and one that you won't actually stick with. By the end of this lesson, you'll understand there's no universally best market. The Forex traders will tell you theirs is superior, the stock market will tell you theirs is superior, and then crypto enthusiasts will claim everything else is outdated. Okay, they're all wrong. The best market is the one that fits your capital, fits your schedule, and your personality. Very, very important. Okay, and your goals. Once you've found it, you can focus on actually becoming good at trading rather than constantly second guessing your market choice. This is very important and goes into broader trading as a whole. Everyone's going to say their system, everyone's going to say the pair that they're trading is the best, but it may be the best for them. Brilliant, congratulate them, but it might not be the best for you, okay? We want to find what's best for you in particular, and every single person is different. So every single system, every single session, every single pair, everything will be different for each individual person and what works for you. This is something which is really important, which we touched on last night's lesson also, and something which I actually spoke to a member on the trading floor here today in depth about, and that is the fact that trading, a lot of people make trading seem like it's very mechanical, it's very step by step. What works for someone is going to work for someone else, and that just couldn't be further from the case. You need to find what works for you, and someone such as myself or the educators inside the community can show you what works for them, and that's brilliant, and then can give you tips and give you a framework to work from. But building up what works for you in particular is a very, very important thing. So for example, when to trade, what pairs to trade, what system to use when. There's a lot of variables, and we need to find out what works for you in particular. We'll also introduce you to the critical skill of actually testing markets before committing real money. You wouldn't buy a car without a test drive. Nice analogy. Same principle applies here. So let's explore your options, find your fit, and set you up for long-term success in the right market from the start. Does that sound good, guys? Hello, TZ. Hello, hello, hello. Let's get into the resource material. And by the way, you can access this full bootcamp inside the private group as well. So, hello, K-Mops. Again, this is more of a lecture style live, so I'm just going to be going through the material, and then from there we've got a quiz at the end which you guys can all get involved with, and to those who are watching at a later point, you can definitely get involved with this quiz as well. Just have like a notepad or be able to jot your answers down somewhere, and then we'll go over the answers, see what you got right, see what you got wrong, and then we can build a foundation from there. So this is just going to be straight value the entire way through. If you do have any questions, then keep them in mind, and we'll do like a little Q&A after we've gone through each section. So each paragraph, if something springs up, let me know, and we'll go through there. So let's explore the primary markets available to retail traders. Forex, the foreign exchange market, is the largest and most liquid market in the world, trading over $6 trillion daily. It's open 24 hours a day, 5 days a week, because it's decentralized and operates across multiple global financial centers. You're trading currencies like Euro USD, GBP JPY, betting on whether one currency will strengthen or weaken against another. Forex offers very low transaction costs on major pairs, high leverage, which is like we explored yesterday, a double-edged sword. With high leverage, you can obviously increase gains, but also increase losses, and the ability to trade nearly any time of the day. The 24-hour nature means you can trade around a full-time job, making it popular with part-time traders. Let me know in the chat now, does that make sense? And if you're watching this at a later point, let me know in the comments, does that make sense? Just on the foreign exchange market, What is it? Why people trade it? The benefits of it. Does that sound good? Let me know in the chat if that sounds good, and we'll go to the next part. And that's what I'm going to do. Like, we haven't got too many parts here, but I'm just going to go through each part. Let me know if it sounds good. Let me know if there's something you need clarifying, and we'll go through that. And please, if you do have any questions at any point, please let me know, as chances are a bunch more people will have that exact same question. So, the stock market involves buying and selling shares of publicly traded companies. Unlike Forex, stocks have defined trading hours, typically from 9:30 a.m. to 4 p.m. Eastern Standard Time for US markets, with extended hours available through some brokers. Stocks offer thousands of individual instruments to trade, from massive companies like Apple, Microsoft, to smaller growth stock companies like penny stock companies. Transaction costs have dropped drastically in recent years, with many brokers now offering zero commission trading. However, less liquid stocks can have wide spreads, and you need to watch for earnings announcements and company-specific news that can cause dramatic price moves. Stocks generally require more capital than Forex or futures because you can't use as much leverage. Let me know if that makes sense, guys. Just covering basically what the stock market is, why people trade it, and everything like that. And stocks can be a lot more objective. You know, if a company's financials are looking extremely good, you can do a big deep dive into stocks. Stocks are very like report based, so looking through again the financials of the entire company, everything which is going on there. It's a lot more words, but it's definitely an option for some people. Yep, sounds good. Perfect. Now let's go into the futures market. So the futures market trade standardized contracts for delivery of commodities, currencies, indices, or other assets at future dates. Popular future includes S&P 500 E-mini, NQ, Nasdaq E-mini, CL, crude oil, GC gold. Futures have defined trading hours but offer nearly 24-hour trading on major contracts through electronic markets. Okay, they provide high leverage with relatively low margin requirements, very tight spreads, and excellent liquidity on major contracts. However, futures have quarterly contract rollovers where you need to close your position in the expiring contract and open a new one in the next quarter. And they have specific contract sizes that might be too large for very small accounts. Let me know if that makes sense regarding futures trading as well. I know we've got a few futures traders inside the group, and definitely the big benefits of futures trading is the trading conditions, the spreads and everything like that. Okay, perfect. Now we get into the Wild West one. So cryptocurrency. Cryptocurrency markets trade digital currencies like Bitcoin, Ethereum, and thousands of altcoins, more commonly known as shitcoins. Unlike traditional markets, crypto never closes. It's genuinely 24/7, 365 days a year. This offers unlimited flexibility, but also means the market can move dramatically whilst you're sleeping. Crypto has relatively low barriers to entry, allowing you to start with small capital. However, it's also the most volatile major market, with regular 10-30% daily moves that would be considered extreme in stocks and Forex. Stocks can still have those types of moves though. Transaction costs vary widely depending on the exchange and whether you're a maker or a taker. The crypto market is less mature than traditional markets, with more scams, hacks, and regulatory uncertainty to navigate. It is, like I said, the Wild West of trading. There's definitely a lot of opportunity there, but it's very tricky. Very tricky, actually. So let me know if that makes sense, if you know what cryptocurrency trading is and everything like that. And then we'll continue into the next part. Let me know if that makes sense. And again, we'll get going into the next part. Sound good? I've done a lot of talking today. Sounds like the dark web of trading a lot. It literally is, Chris. It literally is. Dark web of trading. Okay, sounds good. So, comparing market characteristics. Trading hours fundamentally affect which market suits your schedule. If you work a 9-to-5 job in the UK, you'll struggle to trade US stocks, because the core trading hours, 2:30 p.m. to 9 p.m. UK time, conflict with most working schedules. You might catch the last hours or two, but you'd miss the important morning session. Forex, however, offers multiple trading sessions. The Asia from 11 till 8, the European session from 7 till 4, and the US session from 1 till 10. You can find more liquid trading opportunities during UK evenings, early mornings, or lunch break. Crypto is 24/7 nature, seems perfect for flexibility, but it's a trap if you find yourself obsessively checking prices at 3 a.m. Choose a market with trading hours that match when you're actually available and alert. For most people, that'll be Forex, commodities, not so much stocks. They're tricky to get the hours right, especially if you've got 9 to 5. And then crypto, like which is highlighted here, 24/7. But the problem with crypto is, like it said here, you do become obsessed over the trading hours. And anyone in crypto's definitely been there, where you're waking up at 3, 4 in the morning, like what's going on here? What's going on here? You know, crypto can take over your life. Like it really, really can take over your life. So definitely be careful with that. I love crypto. I do. I've got a love-hate relationship with crypto, definitely. So let me know if that sounds good, also, and then we'll continue into the next few sections. And then again, once we've got through this. There's not too much here. We'll try and get through it as quick as possible, and then highlight points which I think are very important. We've got a quiz after this as well, so make sure you're really paying attention, pick up on those important parts, and then the quiz at the end will really test your knowledge. You sound like you've had a mare with crypto. I most definitely have. When I first got into trading, I got in via crypto, and I'm thankful for it, but oh my, it's awful. Okay, let's continue. So liquidity varies drastically across and within markets. Major Forex pairs like Euro USD, GBP USD are incredibly liquid, with tight spreads and instant fills at nearly any size of retail trader could want. Minor pairs and exotics have wider spreads and less liquidity. Similarly, large cap stocks like Apple and Tesla have excellent liquidity, whilst micro cap stocks might have only sporadic trading and wide spreads. Futures on major indices like ES and NQ are incredibly liquid, really liquid, whilst obscure commodity futures might trade only a few contracts per hour. Good liquidity means you can enter and exit positions quickly at predictable prices. Poor liquidity means you face slippage, wider spreads, and difficulty getting fills, all of which erode your edge. This is very important and something which a lot of people skip over when it comes to trading. The market conditions on the pairs which you are trading are extremely important. If there's not enough liquidity in that particular pair that you're trading, then your fill will just be awful, and you might want to get in here for a buy position, but you end up getting up here, which obviously erodes a huge amount of profit on that move. So let me know if that makes sense, guys, and then we'll get into the next one. Let me know if liquidity makes sense. Obviously, liquidity is a bit of a popular saying now, so I hope that clears up what liquidity actually is. It's basically the ease of getting in and out of a position. Let me know if that makes sense, and we'll go into the next ones. Defo, yeah, crypto is definitely the Wild West. Get that ish. Chris, let us know if you don't get something like 100%, and we'll re-go over it. But let me know what particular part you don't quite get, and again, we'll go over it in more detail. But let's get into capital requirements. So capital requirements vary by market and strategy. Forex micro accounts let you start trading with a few £100s, though you'll be severely limited in position sizing and risk management. On a really small account, let's say you want to trade on a £50 account, you just won't be able to manage risk effectively. Realistically, you need to start with at least £1,000, £2,000 to trade Forex properly. That way you can actually manage risk efficiently, which is very important. Stocks require more capital because leverage is lower. You might need £5,000 to £10,000 to day trade stocks effectively, and $25,000 if you're in the US due to pattern day trading rules. The US is very difficult when it comes to trading legislation. Futures can be traded with £2,000 to £5,000 on micro contracts, scaling up to £10,000 to £25,000 for standard contracts. Crypto can be started with very, very, very small amounts, though you'll face the same position sizing limitations as Forex micro accounts. Don't start trading with capital you can't afford to lose. And remember that smaller accounts face challenges that larger accounts don't. This is very important also. So let me know if that makes sense. Let me know if it doesn't make sense. If you're on a smaller account, then it's going to be, very difficult to manage risk effectively. And you can end up building bad habits, which are very, very hard to shake off when you do have access to that larger capital. Chris, I hope that's not affecting things too much. I hope it's all good. They aren't coming up for me. Hello, Raj. Hello, Sam. But let me know if that makes sense. And again, guys, you can rewatch this at a later point. I'll be timestamping in the description important points, and we'll be doing a quiz once we've ran through it all. I hope this clears up a lot of things which aren't necessarily gone into detail on a lot of points. So let's go into volatility. So I haven't had any adverts. A couple of ads. I don't know. YouTube's strange. Volatility affects both opportunity and risk. Crypto is the most volatile major market, regularly seeing 5 to 10% daily moves in Bitcoin and larger moves in altcoins. This creates both profit and potential for rapid losses. Okay. Forex major pairs typically see 0.5 to 1% daily moves, offering more modest returns but lower risk. Stocks vary. Some move 5 to 10% daily, whilst others barely budge. Some stocks, especially if you're in the biotech industry, they're very known for having just insane moves. Like they can move like 5, 6, 700%, but it all comes down to whether they are like FDA approved and stuff like this. It's a very interesting area, biotech companies. Big shout out to Martin Shkreli, crazy guy. If you do want to look into him, it's a really funny story with him. Interesting guy. But futures on indices like ES typically see 1 to 2% daily moves. Higher volatility means larger profit potential, but requires wider stops, more psychological resilience, and better risk management. Beginners often overestimate their ability to handle volatility. What looks exciting on a demo account feels terrifying when you've got real money. And this is something which is really important with volatility in markets, because you need to find out through journaling which times of the day, more specifically, you're best at trading, because sometimes you might thrive under extremely volatile conditions. So then sort of around New York Open, you're going to be absolutely smashing it. Whereas someone else might thrive in less volatile conditions. So it really depends on you as a person, and through journaling, you'll find this out. What times of the day, how much volatility you perform best in, basically. So let me know if that makes sense, and then we'll move on to the next section. Yeah, I did change it, so you have to be a subscriber to comment in the chat. I don't know if that's got something to do with it. Nice, Sam. Tom, I wish. I wish. That would be... I hear YouTube does well for... what's his name? Mr. Beast. Trading Mr. Beast. Get me that ad revenue. Okay. I didn't know they put lives on ads on live streams. So, choosing your market. Start by assessing your available trading time. If you can trade during UK mornings, the European session for Forex and European stocks work well. If you're available during the evenings, you can catch the US session for Forex or the afternoon session of the US stock market. If you have flexible hours, any market works. But if you're working full-time with limited availability, Forex or crypto provide the most flexibility. Don't try to day trade a market whose peak hours conflict with your job. You'll either neglect work, miss the best setups, or drive yourself mad trying to do both. Very, very important. Does that make sense, guys? And let me know if you've got any questions so far, and we'll happily go into detail on those particular questions. Where's the red? Don't worry. I'll always here with a Red Bull. Okay, that seems to be all good. Let's get into the next part. So, consider your starting capital realistically. With under £1,000, Forex or crypto are your only practical options. You'll still face limitations. With £2,000 to £5,000, you can trade Forex comfortably or futures micro contracts. With £5,000 to £10,000, stocks become a viable option, and you can trade standard futures contracts. With 25,000 plus, all markets are accessible and you have proper position sizing flexibility. Don't fool yourself into thinking you can turn £500 into £50,000 quickly. That's gambling, not trading. Very important. Build your capital gradually through consistent, disciplined trading rather than trying to hit home runs. This is very important. Prove yourself consistent and consistently grow your account. And then there are loads of options. One option in particular inside the private group to grow your capital, like through our private funding service inside the private group, where you can gain access up to $1 million in capital. That's how you should grow your account. So consistently grow it on a live account. And then once you've seen consistency, hop onto a funded account and leverage that consistency on a lot of capital to make serious gains, as a large amount of members have already done. Let me know if that makes sense, and then we'll get into the next section. We haven't got too much left here, and then we'll get into the quiz, which is the most important time to really test your knowledge on this. 100%. And let me know if you're picking up some things through this. We're really diving into each thing in detail. I know it's a lot of words, and I know it's a lot, but if you're here, if you're paying attention during this time, if you're taking part in the quiz, your trading knowledge will improve. And this is, the unfiltered, just raw trading knowledge, trying to cram it in as best we can. So let me know if that makes sense, and we'll get into the next section. Yep. Perfect. So match the market with your personality and risk tolerance. If you have a heart condition, crypto's volatility might literally kill you. Very true. If you're patient, analytical, stocks or swing trading Forex may suit you. If you like action and quick decisions, day trading futures could work. If you struggle with 24-hour markets leading to overtrading, avoid crypto. Be honest about your temperament. A market that gives someone else an edge might give you an unclear edge. There's no point in trading a volatile market that keeps you awake at night, even if the profit potential seems higher. This is a very, very important point. In trading, there's a lot of instances where something may seem objectively better, but it doesn't mean it's going to be the way. So a great analogy for this is, imagine there's two roads and you need to get to the other side of this river, okay? And there's two roads. One road is objectively shorter, okay? That is a shorter road, and the other one's longer. But this road's got a ton of traffic on, okay? It makes sense to go down the shorter road. That seems like the most probable thing to do. But in reality, you're going to get stuck in traffic. You're going to face this. You're going to face this. Someone's going to break down in front of you. This. Car will get hit. Everything like that. Whereas the longer route, although it's longer, there's less traffic. So you'll actually get to the destination faster. Okay, it may seem on paper at first that something is higher ROI, something is better. Just like, for example, I'll trade 20 pairs and then I'll obviously increase my profits potential. Sounds great on paper, but in the real world, it doesn't really work. A lot of things in trading, a lot of things you'll hear in the trading space sound amazing. They sound amazing on video. They sound amazing in some advert. They sound amazing in some sales pitch. But in reality, it just doesn't work in the real world. That's just trading. Let me know if that makes sense, and then we'll move into the next one. Let me know if you've got any questions on that particular section, and I'll happily run over it. Again, we're just doing a deep dive into everything trading, breaking down just everything, just pure, raw, unfiltered knowledge. If you stick through this bootcamp, you will come out of it with an exceptional trading knowledge, okay? Yes, sounds good? Okay, test before you commit. Most brokers offer demo accounts, or you can start with a small amount of capital. We can trade with fake money and get a feel for how the market moves, what the trading hours feel like, and whether that instrument suits you. You can start with a small amount of capital or on demo. The problem is with demo, this is a very important point. I've got kind of an interesting view on demo. So on a demo account, you're not risking any money. Trading is about risking money, okay? So how you perform on a demo account, it means very, very little with regards to how you'll perform on a live account. Because as soon as you put money on the line, okay, that's you putting emotion in the mix. And emotions will throw everything out of whack. So be careful with that. But using a demo to get a feel for when you'll be trading, can you actually have a routine around that market session, etc., isn't a bad idea. Okay. So you can spend at least a month on demo or on a small capital account. And just pay attention to whether you're, don't pay attention to whether you're profitable, just pay attention to whether you can actually trade that pair and those market conditions. It's very, very important. Or constantly check in charts when you should be doing other things. That's feedback telling you this might not be the right fit. So exactly like it says there, if you find yourself checking your charts tons during work, it's getting in the way of life, you're missing the best moves, then maybe that market isn't particularly the best. But for most people, the Forex/commodities is the way to go. So the dangers of market hopping. This is this is super important point, this is. Here's a trap that catches beginners, market hopping. You start trading Forex, you have some losses, you decide Forex is manipulated and switch to stocks. Stocks don't immediately work out, so you try crypto. Crypto is too volatile, so then you try futures. The cycle continues until you've opened accounts with 6 different brokers, haven't mastered any single market, and every time you switch markets, you reset your learning curve to 0. Okay, this is extremely common in the trading space. And I've done it. I think everyone's done it. What happens is, you try to trade, and this doesn't just go for markets, this goes for pairs as well. You jump in, you try and trade Euro USD, and that just doesn't work. So then you jump to GBP USD, and that doesn't work. And then you jump to gold, and that doesn't, and then you jump to silver, and then you would jump to crypto, and then you end up trading some dog coin in crypto on 1000x leverage, okay? Don't jump markets, okay? Find something you like, find something which fits your routine, find something that has a lot of liquidity, a good amount of volatility during the times that you can be active at the charts. Stick with it, okay? You're not going to hop on a pair and it's just going to be, oh my God, this is the magical pair. I wish that was the case, but it's just not. Find a pair, stick with it, learn that pair inside and out. Find out what news is applicable to that pair, okay? Find out everything you can about that pair, how it moves. Every pair moves differently. Find it's like what macroeconomics really affect it, what policies in government really affect it. Just find out everything about that pair. Just learn how it moves, okay? Someone should be able to ask you at the end of the day, what was price like yesterday? And you're like, okay, yeah, it started off bullish, and then it kind of formed like some higher highs, higher lows, and then we started to lose momentum. Like, I want you to live and breathe that pair, and that's how you can truly master a pair. And we're not in this, there's no money in not mastering something, okay? You need to come at this from the perspective as, I'm going to master this. I'm going to have such a profound knowledge that if this topic comes up at like the dinner table, I'm sat there spewing information and people have no clue what's going on, but I know it in detail, okay? You need to master this. That's where the big money is. The big money is in mastery. Let me know if that makes sense, and then we'll move on to the next bit. If I do say something or skip over something quickly, I do sometimes talk quite quickly, then please let me know, and I'll happily go back over it. The quality of content and education is insane in comparison to anything else that's out there. Really appreciate that, Simon. If you answer into YouTube. Okay, that's a good point, Eve. Yeah, so signing into YouTube and then should get rid of them, I guess. Well, yes. Okay, good. So, different markets have different personalities, okay? Different optimal strategies and different nuances that take time to learn. Forex responds to interest rates, differentiations. God, I've spoke so much there, I can't even talk. And central bank policy. Stocks respond to earnings, company news, and sector rotation. Crypto responds to, well, often very little. Crypto can respond to what coloured suit Trump wears. Crazy space. But it has its own patterns and behaviours. What works in one market might fall in another. Breakout strategies that work brilliantly in trending futures might get chopped out in ranging forex pairs. Mean reversing strategies that might work in stocks might get destroyed in trending crypto. The solution is commitment, okay? Pick one market, preferably the one that best matches your schedule, capital, and temperament, and stick with it for at least 6 months. Learn its rhythms, its typical daily range, how it moves during different sessions, what causes it to trend versus range. Develop pattern recognition specific to that market. Most successful traders specialize in one market, or even just a handful of instruments within that market. Depth beats breadth in trading. It's better to know Euro USD inside and out than have superficial knowledge of 50 different instruments. Let me know if that makes sense, guys. Let me know if you want me to clarify any particular part that we went over there, and I happily will. And then we'll get into the quiz. And yeah. Jack of all trades, master of none. Better to be an expert. 100% agree. 100% agree. And you can master a pair in not too long, okay? Things can really pick up quick. I was speaking to a member today on the trading floor, and she said, things were very slow for a long time, and then suddenly it just boomed, okay? Things can be very slow for a long time while you're learning, and then just absolutely boom. But if you want to actually do this and you want to, learn trading and get that trading lifestyle, be able to, have that financial freedom, be your own boss, trade from anywhere, and be able to really make some serious money, then this is just part of the journey. And you can do it. You can do it. I know you can do it. We've got members of all ages, all demographics, everything, like every type of person you could possibly think of. We've got a member in that particular demographic who's crushing it in the group. If they can do it, you can do it. All good? All good? Perfect. Okay, so what we're going to do now is we're going to get into the quiz. So for this quiz, I want you to write down something, get a piece of paper, take this time now. If you're watching this at a later point, pause the video or something like this. Get just a piece of paper or even write it in the chat or just note it down somewhere. So when we go through the answers, you know what areas you got right, what areas you got wrong. The questions you get wrong, just rewind this video or research it or send me a question on Telegram or message in the Discord and find out the answer to that question, okay? Find out the answer, find out where you went wrong, and yeah, really focus on the questions you get wrong, okay? The questions you get right, you've got them right, who cares, okay? The questions you get wrong, they are the areas, they are the golden opportunities to really learn, okay? Makes no sense. All good, all good. Okay, let me know if you're ready in the chat now with a yes, and let me know in the comments if you're watching this video at a later point how well you did on the quiz, and let me know if you've got any questions in the comment section as well. I do respond to the comments, so if you ask me an in-detail question, I'll give you an in-detail answer in the comments as well. So don't be afraid to drop them. I'm making sure to look through the comments a lot, as well as there was quite a few good questions in the comments on the past few live streams. So let me know if that sounds good. And then we'll go from there. Ready? Boom. Okay, let's get into it then. So, which market trades truly 24/7, 365? What market never closes? Okay, is it A, Forex, B, stocks, C, futures, or D, crypto? Let us know in the chat, and also, if you think it's not an answer which you see in the chat, don't be afraid to say what you think it is, okay? Getting things wrong is where you learn. If you join this and you get everything correct, then great, it's reinstilled knowledge that you've already got, but you haven't really learned anything. I want you to get things wrong, okay? Because that's where you learn. So get things wrong, go complete wild and off track, okay? Because that's where you really learn. D, okay? We'll go through the answers at the end. Which factor most directly affects spreads and slippage? Candle color, liquidity, dividend yield, exchange holidays. Directly affects spreads and slippage, okay? What do you think it is? Let us know in the chat now. If you're watching this at a later point, then keep an eye on the answers and then go through them at a later point. And I hope you like the background as well. Obviously, in December, if you're watching this at a later point, in December, this is the Christmas bootcamp. We're going through it on Christmas. Okay. Perfect, guys. So 3. Typical characteristics of major FX pairs during London-New York overlap are: A, again, typical characteristics of major FX Forex pairs during London/New York overlap. Wide spreads, low liquidity. Tight spreads, high liquidity. Tight spreads, low liquidity. Wide spreads, high liquidity. Okay? During the London and New York overlap. Okay? What do we think it is? Seen a lot of people in the chat crushing it, by the way, which is really, really nice to see. Okay, we'll go over the answers at the end. Definitely get involved for this, guys. Type the answer in the chat. This is where the learning really takes place. We've gone over the boring part. We've gone over the information. Okay, we've gone through all of the information. We've gone through every single question that's asked here. We've gone through the reasoning and the answer in it previously. This is where the true learning takes place, though. So really get involved. 2 considerations when selecting a market to match your schedule are: broker logo and theme, trading hours and session liquidity, number of YouTube videos, weekend closures only. What is to consider when selecting a market to match your schedule? DV said DV. That was funny. Okay, perfect. Let's get into the next one. True or false? Higher volatility increases both opportunity and risk, requiring wider stops. Often requiring wider stops. So higher volatility increases both opportunity and risk, often requiring wider stops. Is that true or false? Higher volatility, increase in opportunity and risk, often requiring a wider stop. Nice. Okay, very nice. Okay, name one key difference between futures and stocks for retail traders. Okay, we went through this information before. Even if you don't know the answer, just say something random, okay? Give it a good go. Name one difference between futures market and stocks market. Again, futures market, stocks market. It might be session timing. It might be how the contracts work. Something like this. It might be capital required. What is it? Let us know in the chat. And again, if you're watching this at a later point, jotting this down somewhere. And then we'll go over the answers after this. Lots saying capital. Okay, nice. Okay, for a UK 9 to 5 schedule, which sessions are most suitable for evening trading and why? For the UK 9 to 5 schedule, which sessions are most suitable for evening trading? Okay, which sessions? And then we've only got 2 more questions after this, guys. So well done for everyone who's stuck through this full thing. We've definitely gone over some great information, and these questions are very, very important to know. Okay, perfect. Okay, perfect. With £2,500 starting capital, which markets are commonly more viable initially and why? So if you're starting with £2,500, which markets are open to you, really are more viable to you? Let me know in the chat now, write it down, and then we'll go into the final question. Futures Forex. Nice. Okay. Write one rule you would use to avoid market hopping over the next 6 months. Okay. So you need to not jump around markets. Okay. You need to find one market or one pair or, maybe 1, 2, 3 pairs maximum What rule are you going to put in place for yourself so you're not jumping around markets each day? Is it going to be, I'm not allowed to switch pairs unless I've journaled trades for an entire month or entire 2 months. I'm not allowed to switch pairs unless I've journaled a trade for that entire month. I'm not going to, if my edge has decayed or it's just not working over a period of how long, am I then going to switch charts? At what point is it viable for you to switch pairs? Because you shouldn't really switch pairs. You want to stay on one pair specifically, really, and just learn the ins and outs of that pair. Again, changes depending on the person, but that's a very good rule of thumb to have. What are you going to do to avoid jumping pairs? And what are you going to do to know, okay, this pair really isn't working out for me. I am going to try a new pair. Because we don't want to, limit you. The first pair you pick shouldn't, force you into some barrel. It should give you a lot of opportunity. So we don't want to, ruin you off the start, but also we want to make sure you've got the time to really learn that pair. Be disciplined enough to stick with it, learn about it, journal. Yeah, really, really, really nice. Really, really nice. Okay. Perfect, guys. So what we're going to do now is we're going to go over the answers for the questions. And so, yeah, let me know how well you do. So first one, crypto. So crypto trades continuously. Forex pauses on weekends. Stocks and futures have exchange hours or maintenance. Question 2, liquidity. Higher liquidity narrows spreads and reduces market impact. Illiquid periods widen spreads and increase slippage. Question 3. London-New York overlap. Tight spreads, high liquidity. When London session is overlapping New York session, that's a lot of market participants, okay? That's a lot of liquidity, so it's going to be more liquid, spreads are going to be tighter. Align your availability with liquid, Session overlap concentrates participation, improving depth and execution quality. Matching market to your schedule. B, trading hours and session liquidity. Align your availability with liquid sessions to avoid wide spreads and poor fills. Volatility and stops. True. Higher volatility expands ATR and often requires wider stops and approximately smaller sizes to keep 1R consistent. This, I spoke about this heavily last month when we had an all-time high in gold volatility. So the ATR, average true range, that tracks the volatility of a pair, and that was at an all-time high. Like it literally gone like this. It was insane. And so volatility on gold was extremely high. So a stop loss that you may have used before, that might have been 30, 40 pips, was now 100, 150 pips. It ruined a lot of people because they didn't understand volatility in the markets, okay? Volatility is something you should really, really keep an eye on. And a great way to do that is looking at that ATR indicator, average true range, shows the volatility in a market. Okay, futures versus stocks. Futures often offer centralized exchanges, true volume, and leverage with margin. Single contract can provide diversified index exposure. Stocks are incredible shares with no inherent leverage in cash accounts and occur during set market hours. Question 7. Liquidity eroding edge. Wide spreads turn small intended profits into losses. Slippage on entry/exit changes R multiple, reduces expectancy. So have you ever gone into a trade and you set your stop loss and you expect if that stop loss is hit, you lose £100, but instead you lose 110, 120 pounds? That is slippage, okay? And that can really erode your profits, okay? And really increase your losses. UK 9 to 5 evening sessions. Late US session in Forex Globex, Futures Globex, and London close to early US afternoon for Forex. Liquidity is still reasonable without staying up overnight. 2,500 starting capital viability. FX or CFD / mini futures with strict risk management, or swing trading stocks to reduce frequency. Choose markets where position sizing gradually allows proper 1R. If you're uncertain what 1R means, then you can refer back to the previous bootcamp day section. Anti-market hopping rule. Commit to one primary market for 6 months. No switching unless documented expectancy after 100 trades is negative. Have the discipline to stick to that market. Stick to that pair, stick to that couple of pairs, stick to those. You've just got to have the discipline. There's nothing I can say really that will really force you to do this. You've just got to do this on your own. You've really got to have that discipline. Just go out there, stick with it, crush it, and see gains over time. Let me know, guys, how you experienced that. Let me know how you did over the course of the quiz. Let me know what you got out of 10. Did you get 8 out of 10? Did you get 10 out of 10? Did you get 5 out of 10? Let me know how you did. And I hope you enjoyed this day 2 of the bootcamp, which we're going to be doing every single day throughout December. So we're going to be going through, day 1 to 30, covering each section of the bootcamp. It's just going to be straight, raw, unfiltered value with a quiz at the end. And yeah, these are going to be uploaded on YouTube after. And if you have watched this at a later point, let me know in the comments how you've found it. The spreads nuts. Yeah, Eve, I remember you talking about the spreads on silver. I had that conversation again today. 30 points. Well, nice, Chris. Really, really nice. 8 out of 10. Still really nice. Oh, did I miss question 7? Liquidity and eroding edge, wide spreads turn small intended profits. This is, wait there, it doesn't see. Oh no, it's not. It wasn't a set letter answer. It was a wording thing. Cool. Thanks, Maxi Legend. Nice. And I hope, guys, this really covers a lot of value in depth. I really just want to get into the nitty gritty, the behind the scenes of trading. I want to increase your broader knowledge of trading and just run through it. And look, if you stick with this will improve you as a trader. Simple as that. There's few things you can do in the world which will improve you as a trader. But a few of them are journaling. Journaling will improve you as a trader. And seeing through this bootcamp, following as we go along, taking part in the quiz will improve you and will increase your knowledge of the markets. It will, okay? And so, yeah, I think we'll finish up there. Really appreciate everyone tuning in. Let me know what you thought of this part. If you do think of any more improvements, a few members did message me yesterday. They wanted more of a lecture live, so not as not as engaging with comments, but more just going through the value, getting to that quiz, and just raw, unfiltered value. Boom, 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 boom. So let me know if you enjoyed this more lecture style. Let me know if you can think of any more improvements to make this as easy and as fluid as possible for you to watch and learn through. I really want to make this as engaging as possible, so you stick through it and really, really reap the rewards of actually learning how to trade. So yeah, take care, guys. Have an amazing night, and I'll be live as normal tonight as well. So I'll see you on the normal live where we can have a good catch up. So yeah, take care, guys. See you all in a bit. See you in a bit, Steve. See you in a bit, Tony, DZ, Nikki, K-Mops, Chris, Eve, DB, Nisi, Sam, Tony, Bella. Take care, guys. Have a great night.